Good morning on this lovely Martin Luther King Jr. Day. I'm Travis Watkins, and I've been thinking about the legacy that Dr. Martin Luther King left to this country and how far we've come since he did all the great things that he did for this country. And there's a lot of division here in the United States right now still, but I think if we focus more on how we're alike rather than our differences, we could go a lot further even. And I guess that's why I love fixing tax problems so much, is because really the IRS problem, the tax problem, kind of spans the entire American experience, I guess, if you will. In other words, if you've made yourself some money here in the United States, or even if you've made some money abroad and you're an American citizen, the IRS really knows no creed or color, or they may know some political affiliation that you may have, but for the most part, if you made yourself some money in the United States and you owe them, they're going to come after you with really all they've got. So those are kind of my thoughts here on Martin Luther King Day, and kind of plugging into IRS problems. We've been talking over the last couple of weeks about things that you can do if you have an IRS problem, and there's a ton of these things that are in my book that you can pick up at traviswatkinsbook.com, or you can call us immediately if you have a tax problem at 800-721-7054. But we've talked a little bit already over the last few weeks about finding out how you would know if you have a tax problem, and finding out the exact nature and extent of those problems by getting the IRS master tax file, for one thing. And if those master tax files show that you have not paid or have not filed tax returns, then we've talked about how you can go about getting those things remedied as well, getting your tax returns on file, because the IRS won't even talk to you about collection alternatives or remedies to IRS problems if you have unfiled returns hanging out there. So I'm going to assume that you're at that point now where you know for sure that you have some type of a tax problem. So that's my first assumption. And second of all, that you now have all your tax returns on file, so that we can at least start talking about how to get the collection problem at the IRS fixed. So assuming that you already know you got a tax problem and that you've got your returns on file and they're at least assessed or on their way to being assessed, in other words, the IRS is getting ready to send you a bill, or they already have, let's talk about the 5 things that you can do right now to get those problems remedied. And I'm going to give you kind of a big 50,000 foot overview. So this is real general, but I think it'll be helpful for you as to the things that you can do to fix your tax problem, kind of the universe, as I see it, of options that you have. All right, so let's get started on that. First one, this may seem kind of overly intuitive or Captain Obvious of me, but the IRS's preference and the only surefire way to solve a tax problem completely and to do it right now is, number one, the full pay strategy. In other words, paying the IRS everything that they say that you owe, including penalties and interest. That will take care of a tax problem. Go figure, right? But I'm not just being the wise guy here. This is a great option, obviously. If you have the money, and you have it right now, or even if you don't have it all right now, start making a way to pay all that you owe to the IRS, because that's going to definitely solve the problem. And just kind of as an aside here, if you tell the IRS that you're on your way to a full pay, that you're going to full pay the debt that they say that you owe, a lot of times, most times, they will give you at least 120 days, if you haven't already asked for some type of a remedy with the IRS. They'll give you some time there to round up the money without a bunch of collection things going on. They may even hold off on filing a lien, which is great. And that helps out a lot of people. If you've got some money coming down the pipe, or you got a bunch of receivables, people owe you money, then give the IRS a call and tell them that you're going to full pay the debt and you'd like 120 days or so to allow you to pay that, full pay that amount. All right? So that's strategy number one, obviously. The second strategy is to pay it in some type of an installment. In other words, you can't pay it all up front. I don't really ever recommend that you do this to play on the government's dime, so to speak. In other words, if you have the money and you just plain don't want to pay it right now because you got other things that you'd rather spend your money on, an installment agreement is not what I'm talking about for that type of a plan. Just go ahead and do the full pay strategy and ask for a little bit more time. But if you don't have it all, and the rest of what I'm going to be talking about here today is assuming that you don't have it all to pay right now or within 120 days or so, you can seek an installment agreement with the IRS. That's a good option. And there's several different types of these, and I'll tell you more about them over the coming days here. I'm giving you a pretty broad flyby. But there are simple types of installment plans, or streamlined, as they call it. If your debt is under a certain amount, they will allow you to pay this without having to pay this over time, without having to provide just a ton of financial documentation. All right, and so that's a good option. There are also complex installment agreements. If your debt is over a certain threshold, the IRS is going to want to see financial documentation to, first of all, see if you can full pay. Remember that strategy number one, full pay the entire tax there, or to liquidate a good chunk of it through your assets or your retirement accounts, or anywhere where you might not have the money sitting there immediately, but that you can sell something or borrow something to get that full paid pretty quickly. And as an aside there, if they do see that there is substantial money there in which you could full pay or pay a substantial amount, they are going to require you to do that before giving you any type of an installment agreement. So, long story short, an installment agreement, despite what the IRS may say in public service announcements, for instance, is not always the easiest thing to get, because they're going to be looking to see if you can full pay the debt or liquidate a substantial amount in a very short period of time before they even give you an installment agreement. And again, what I'm talking about here is if you fall or your debt falls within or over a certain threshold there, and you're in the complex installment agreement category. So be aware of that. They're always looking to see, even if you're asking them for a installment agreement or a complex installment agreement, they're always looking to see if you can full pay the debt. All right. Option number 3, you can, in some circumstances, discharge tax liabilities, and that's personal tax liabilities, in bankruptcy. And that comes as a surprise to many people because it is a complex concept, and there are a lot of exceptions to this. But generally speaking, again, you can, in certain circumstances, discharge a personal tax liability, a 1040 debt, in bankruptcy, and that's Chapter 7 bankruptcy. In other words, the personal discharge type of bankruptcy. In certain circumstances, you need to seek the advice of a professional, in my opinion, when you are contemplating this third type of strategy, because of all the exceptions and the requirements there. I'm not making any type of representation here that you are otherwise a bankruptcy candidate. In fact, our firm does not do bankruptcy. We do nothing but IRS and state tax collection matters. We leave the bankruptcy stuff to the bankruptcy professionals who know best and can advocate for you on that. However, we do these bankruptcy types of analyses to see if the debt itself could otherwise be dischargeable under the IRS codes and rules. All right, so just know that's a third option. And even if you're not a bankruptcy candidate, or you don't want to ultimately take bankruptcy, if it's a close call, I've been known to use this strategy quite often to kind of wave that as a sword whenever it could possibly be on the table. So you may not have to take bankruptcy, but if you are otherwise a good candidate for bankruptcy, and they are in fact dischargeable under the bankruptcy and IRS codes, then why not use it as some leverage to get, say, another type of collection alternative or remedy. All right. Strategy number 4 is to have the IRS deem your tax liability either in full or partially not collectible or uncollectible. There's a certain status there that the IRS can put on your account that shows you are uncollectible. And what I'm talking about there is you can't otherwise provide for your necessities of living, food, clothing, shelter, health, welfare, those types of things. The IRS has certain programs and certain statuses within their systems, your account systems, and you can check these, of course, on your account transcripts that we've talked about. And all these things are, how to get those transcripts are available in my past videos here, or you can download them yourself on traviswatkinsbook.com. But uncollectible status is a thing. You can have them put your account into a kind of a safe harbor there, and it typically lasts for about 2 years, sometimes more. And it all kind of depends on how what your statute of limitations or your CSED is with the IRS. But it's a good strategy to at least get you some relief if you're otherwise completely unable to provide for the necessities of life for yourself and your family. So know that is also an option here. And what's so great about the non-collectible status, it stinks to be there, of course, but the IRS statute of limitations, or CSED, continues to run while they keep their hands off of you from a collection standpoint while you're in that status. Of course, once you start making some money, or you can further provide for your necessities of life, then you're going to fall out of the uncollectible status. And we'll talk some more in later videos about the kind of a deep dive on the uncollectible status. But just know for now that it's available. And finally, but not least, the 5th strategy is do nothing. And I'm completely serious about that. And let me clarify. When I say do nothing, about your tax liability. In other words, don't take any action. What I'm talking about there is that you make sure that doing nothing is on purpose. It's a calculated doing of nothing rather than just a default putting your head in the sand type of doing nothing, and I'll explain. We've talked in previous videos and in my book, available at traviswatkinsbook.com, about certain times when you might be, say, close to the end of the IRS's statute of limitations, that you might just choose strategically to wait that out. And it does happen from time to time that the IRS will miss its statute of limitations. In other words, the debt falls off, and so you don't want to stop the IRS's statute of limitations from running against them by making a request of some type for one of the remedies that we've already been over, because, as we've discussed before, all those things stop the statute of limitations from running against the IRS, plus they get some amount of grace period, sometimes up to 180 days worth of grace period, to come after you. So if you're in one of those situations and it's a strategic doing of nothing, then that may be something that you might want to consider. You don't want to consider doing nothing as a default kind of procrastination type of thing. That's what gets you into trouble, and that's what can lead to lots of sleepless nights and aggravation and plenty of IRS collection enforcement type of activity. So don't do nothing just because you don't feel like it or you think it might go away. But be aware that sometimes if you're, say, close to the statute of limitations, and you can find that out by looking at your account transcripts, plus that that special type of transcript that we've talked about, the IMFOLT or MFOLT type of transcript, then you might want to consider that. All right. I hope you have a great Martin Luther King Day, Jr. Day, and I hope you're getting something out of these videos. I'll see you pretty soon with some more helpful insight on IRS problems, and thanks for watching.